Hello, good afternoon. Afternoon, Facebook, afternoon, IG. Let me get IG on. All right. Okay. All right, good afternoon, guys. How are y'all doing out there on this lovely Thursday afternoon? It's a little bit brighter here today in LA. I want to welcome you guys on here. Hi, Inez. How are you? Thanks for jumping on here. Elaine Proby here, CEO PROBY'S Tax and Accounting. And guys, today we want to talk about something that's very, very cool. I really like this topic because it means money in your pocket. And anything tax-wise that means money in your pocket, you know, I'm always excited about talking about it. So today what we want to cover is tax credits, claiming tax credits, right? That's what we want to talk about today. And I love this topic. Again, claiming tax credits. One, is going to reduce your taxes, or two, bring money back in your pocket. So I'm excited about this topic. So I want to talk about 3 different points today regarding the claiming of tax credits. One of them is going to be what are tax credits. I'm going to explain that to you guys, what tax credits are. We'll talk about who is eligible for tax credits, and then we'll talk about can you claim back tax credits. And so those are 3 points we want to cover today. So you guys make some notes of this, hit like and share this video with your friends. Again, there's a lot of people who's leaving a lot of money on the table with some of these tax credits and back taxes. So stick around. We're going to talk about if you did have back taxes and credits you can claim for something you hadn't filed. We'll talk about what you need to do to get that done. All right. So thanks, Laverne. Thanks for jumping on. Leave your questions and your comments below so we can get to them. Thomas Zero, thanks for jumping on. And so let's just jump right into this. What are tax credits? I know we hear this all the time. Everybody's, you know, kicking this around, tax credits, tax deduction, tax this. But the greater of them all is the tax credits, right? A tax credit is a dollar for dollar reduction in your taxes. And this is the good part. Deductions reduce your taxable income and all this other stuff. But tax credit is a dollar for dollar reduction in your tax liability, okay? So let me give you an example. So let's say you did your taxes and you wind up owing, say, $2,000. And so now you owe the government $2,000, no questions asked, you got to pay that $2,000. However, in there's some tax credits that you didn't take, maybe education credit, or maybe there's, you know, credit for child tax or whatever. We'll talk about those different credits. And if you owe, let's say, $2,000, then you're eligible for tax credit, say $2,000, then you owe $0, right? $0. So this is what I like tax credit for, because it's a dollar for dollar. It's not a deduction. It's not a percentage of your taxable income. It's not some of it. It's a dollar for dollar reduction of the taxes. All right. So if you owe $2,000 and you have a tax credit that comes in there, it will reduce it to $0. Okay. All right. So that's what a tax credit does. And so we want to make sure that we never miss tax credits, because that's the best. Like I said, that's the best one of them all, better than the deduction, right? There's several types of tax credit. There's some tax credits that are refundable tax credits, which means that you get that money back as a refund check. And there are tax credits that just reduces your taxable income. So what that means is the non-refundable tax credit if you have a tax liability, again, let's use $2,000, okay, and then you have a tax credit that exceeds the $2,000, it will reduce your $2,000. You'll owe zero, but you will not get the difference of that money back as a refund. Okay, so let me explain that again. The non-refundable tax credit, what it does, it just reduces your tax liability. So for instance, if you had a $2,000 tax liability, and let's say you have a $2,500 non-refundable tax credit, what happens is it reduces that $2,000 to zero. You owe no money to the government, but you don't get that $500 back as a refund because it's a non-refundable tax credit. Right? Unlike the refundable tax credit, what happens is you will get that money back after it reduces your tax liability. Let's say it reduces it $2,000, and if it's a refundable credit, the $500, the difference will come back to you in the form of a refund. Okay, so that's the difference between a non-refundable and a refundable tax credit, and it all depends on what type of credits these you're eligible for as to what determines whether it's a refundable or a non-refundable credit, right? So that's the difference between the non-refundable and the refundable credits. Let me give you guys some example of tax credits so you guys can really have an idea of what we're talking about. Hi, Mighty Dre. Thanks for jumping on. Right. So an example of some of the credits we're talking about, the most common, like the earned income tax credit. Most people are very familiar with the earned income tax credit. A lot of people are familiar with the child tax credit. A lot of people are familiar with the education, the American Opportunity Tax Credit. That's the education credit. And then just to add to the education credit, guys, there's the American Opportunity and there's a lifetime learning. So if you are going to school and you already exceeded your 4 years of American Opportunity credit, they got what is called a lifetime learning credit. You can continue to get that credit if you're eligible for it. Other credit would be like the child care credit. You have health care tax credit, and certain credits like savers credit. You set money aside into a plan, you get a savers tax credit. You guys may have seen some of that on your taxes, but maybe not really understand what it's all about. Okay, so some of those credits are most common. Of course, there's a lot of other types of credits and stuff that we wouldn't get into, and but the most common I want to discuss with you guys today are those credits. So again, let's go back over the tax credits, which is what a credit is, and it's a dollar for dollar reduction of your income tax liability, dollar for dollar. So credits is the best. I really love those. All right, so let's move on to our second point today. Who is eligible for these credits, right? We talk about claiming these credits and we talk about what they are. Again, who is eligible for these credits? Right? So hi, Klaus, for props for jumping on here. To qualify for these credit, guys, for the most part, you've got to be single, maybe head of household, a qualifying widow with a qualifying child. You cannot file married. Filing separate is one of the status that will loses a lot of credit. Married filing separate loses a lot of credit. So, but filing single, filing married joint, head of household, qualifying widow with a qualifying child is eligible for all those credits that we just talked about. And again, it has to be within your income limits, right? Because there's a limitation and all this stuff, right? If you made over a certain amount, you're not eligible for the credit. So they schedule it so that you have to be within a certain income bracket to be able to be eligible for most of these credits. And then, so for example, I want to talk about this one specifically. You have to be eligible. Again, you have to have earned income. So let's say you are trying to see if you can get monies back on earned income credit. Some people have dependents, and there was like 2 or 3 qualifying dependents, and they want to know, can I get the earned income tax credit? And I get this question all the time. People are saying, well, how do I get the earned income tax credit? And, and I have some dependents, right? And this is, like I said, a question, very common. People are always asking about it. But the key to it's the earned income tax credit. So you have to have, guys, earned income, right? You have to have earned income. So to qualify for, let's say, the earned income tax credit, you have to have earned income. And earned income, something you work for. It doesn't have to be a W-2 job necessarily. You could be self-employed. You could just, as long as you have some earned income, you're eligible for the earned income tax credit if you have qualifying dependents. So that's one of the examples of who qualifies for these credits. Again, the credits are really based on your earned income and your adjusted gross income and then making sure that it falls within the limits. Like I said, there's limitations to all this stuff, right? So that's who qualifies for this credit. And again, the married filing separate, guys, is a no-no. A lot of credits you lose there with the married filing separate status. That's the only one, all right? So that's my second point. Again, who's eligible for the tax credits. All right, so we're gonna jump off into the third point here, and that is claiming back tax credits. Everybody wants to know, what can I claim back tax credit? Now that I'm familiar with these credits, now that I know what they are, education credit, I never took it and I forgot that I went to school 2 years ago. How can I claim back tax credit if that I was eligible for? So just so you know, guys, the credit has to be claimed in the year that you incur or the year that you qualify for the credit. For instance, you can't claim a credit for your education on your 2020 tax return if that credit should have been claimed in 2019 or 2018. All right. So you have to claim it in that year. So what you would have to do, for instance, if you had a credit you didn't claim in a back tax year, you'd have to go back, amend that tax year, and claim that credit. Okay. You have to go back to that tax year. You have to amend that tax return. So you'd have to amend, let's say, your 2018 taxes for you to be able to claim that credit. You cannot put it on your current year taxes. And I get this question all the time from clients. It's like, I forgot to claim my education credit. I went to school in 2018. Can I put it on this tax return? And, know that the answer to that is we could go back and amend your 2018 taxes. We can claim the credit in 2018, but you cannot put it on your 2020 taxes. All right. So you could claim back tax credit, but you have to go back and claim it in the year that you incur or you got that credit. Right. Now, one thing that I want to make sure that you guys is aware of, and I cannot hammer this point home enough. The federal government will not refund your money back after 3 years. You loses that credit. And I had several points that we talked about this. You lose the credit if the taxes have passed 3 years. So if you came to me and said that you didn't claim your education credit, for instance, using that one as an example that you was eligible for, and if the filing date of that year of the tax return, for example, if it was a 2017 return that was due to be filed in 2018, counting 3 years going forward, you guys would have to claim that credit, let's say by April, now May 15th, since it's been extended, of 2021. Because once it exceeds the 3-year period, you lose the refund. Okay, so if it's refund coming back to you, you have to claim it within the 3-year period. And I love to hammer this home because, again, like I said, I've got a lot of clients who will file back year taxes, and they lose refunds because it's past the 3 years, thousands and thousands in refunds. So yes, you could claim back credits. You could go back and claim them, but you must go back and amend those taxes, and you want to do it within the 3-year period. So I urge you guys, if anyone feel that there's credit that they forgot to claim, education credit or something they didn't put on their taxes and they're eligible for it, you want to take a look at it and make sure that it has not exceeded the 3-year period. All right, so good. That's my 3 points today, guys. If you have any questions, make sure you put them on the bottom of the screen. I want to recap what those 3 points is today. Claiming back tax credit. Again, like I said, I am in love with this topic because this is money's in your pocket. This is refund. This is wiping out tax liability. It's better than deduction. Credit is $1 for $1 reduction of your tax liability. The best thing that they got. Okay, and most big corporations, most of the, there's business tax credit, all kinds of credit. Most of the corporations take advantage of, and that's the reason why a lot of them pay so little taxes, because they know how to take advantage of all these credits. And as an individual, guys, you want to make sure that you are aware of all these credits as well. So let's recap today. Claiming back tax credit. Number 1 is water tax credits. And, we talked about those. I mentioned a lot of the different types of most common tax credits, right? That they reduce your tax liability, and some of it is refundable or non-refundable. So even if you doesn't owe any money, you can get some of this credit back as a refund check. Second one is who is eligible. And for the most part, you must have had earned income, guys. Must have earned income, must be within a certain adjusted gross income on your taxes, because there's limitation for these credits, and your filing status can be anything other than married filing separate, because you would lose a lot of credits that way if you file married separate. And the third one is the claiming of the back credits. Yes, you have to claim the credits in the year that you deserve those credits, but if you have to go back and file a back tax year, if you have credit for a prior year, you have to file that tax year, go back and amend those taxes. Even if you file them already, go back and amend those taxes and claim those credit in the year that you should have claimed them. Okay, so that's my 3 points today. Again, guys, the credits are very important. I want you guys to hit like and share on this video, because I'm sure you have a lot of folks that is interested, that would like to know that there's credits and there's money back there that they may be sitting on, that they could get from the government, that they may have forgot to claim. You know, so we want to make sure that you guys doesn't miss out, because so you can get monies in your pocket, increase your cash flow, and continue to build wealth. Okay, so that's it today, guys. I want you guys to turn on your notification. Make sure that you know when we come on with these great information, and then make sure that you guys put your comments in the on the bottom of this screen. If you guys want to hear anything specifically, any questions that you may have, personal or business wise, we're here to assist you with that. Give us a call here at PROBY'S Tax and Accounting, 323-290-9034. And or you guys visit our website, PROBY'Stax.com. Visit our website. We have a secure website. If you haven't done your taxes, you need to get those done, or any other business or financial matters that you need to handle, you guys give us a call or go on our website, create yourself an account. We have a secure website, and we'll be able to take care of you no matter where you are in the U.S. We can take care of you in any state. We do taxes all over. Everything is done automatically, and we'll be able to handle it for you. Okay. So with that said, I want to encourage you guys to come back here every week. Again, hit like and share on this video. Check out our YouTube channel. There's a lot of good stuff over there. And we're going to have a course coming up real soon for those people who wants to understand how to start, run a business, operate a business. We have helped a lot of business make millions and millions and millions of dollars. We want to make sure that you do the same. All right. So you can build wealth. And so we will be able to show you how to make that happen. All right. So stay tuned. And again, I can't emphasize enough. We're still in COVID. We still got to follow instructions. We still got to, follow some of these rules. And I want you guys to make sure that you do that. And I want you guys to take care of each other and take care of yourself. See you guys back here next week. Thank you. Bye-bye.